Well, hello again, Solis Wealth family. Greg Solis here with our update. First of all, on the family front, big news here. Emily finally graduated from high school. It was just an awesome celebration. I was so proud of her. Had family and friends in town and had a little function for her. And it was just amazing. Somewhat emotional, somewhat sentimental for sure, but I'm so happy for her. And Nicole was able to come into town for it. So she's now home for summer break, came in from Hawaii. And another piece of big news is she actually brought her boyfriend with her. So his name's Dylan, and they seem like they're pretty serious. So that was exciting. It's an exciting time. And Jack's doing great. Monica's doing well. We're excited for the summer. And then, of course, in August, Emily will be heading off to TCU. So we will be empty nesters. It's a big day, but exciting time for the Solis family for sure. I hope you and your family are doing well also. Market-wise, it's been little tamer these days. We haven't seen any big, huge moves up or down on the equity markets. And really, there's what's going on here. There's really five key components, and it's kind of challenging. It's a little worrisome in that we've been dealing with these inflation issues, rising interest rates with the Fed raising rates. Recession fears are certainly out there for sure. We got the banking issues. That's a real concern. And then now we got the debt ceiling issues. So there's five things that the market's really focused on that's creating a lot of worry. So there's a lot of negative sentiment out there for sure, and it's making it difficult for the market to get any traction on the upside. So our feeling is this: the Fed is probably done raising rates. They'll probably pause here, and really by the end of the year, we'll see them lowering rates. We think inflation's going to kind of calm down a bit. So that's good news. As far as a recession, yeah, we feel we will go into recession, but we think it might be short and mild and won't be a deep, prolonged recession. And the banking issue is an issue that I'm concerned about for sure. It's something that we're keeping a close eye on, and we'll kind of see how that plays out. But I think that'll take care of itself over time. I don't see it being a systemic long-term thing. And so hopefully that won't cause any big issues. And there's just a lot of cash still on the sidelines. There's about $5.3 trillion in money market right now. That's one of the highest of all time. Sure, interest rates have gone up, and so investors are taking advantage of getting those higher yields on money market. But we really don't we don't see it where that's going to be long term. That money will start to transition back into investment products, and we think that'll help drive the market. But $5.3 trillion is a lot of money sitting on the sidelines. So the equity markets, again, we're still off on the S&P 500 about right around 13% from its all-time high that we hit back in December of 2021. So peak to trough, we were down about 25% on the S&P 500. We're now only down 13. So we got almost about half of it back. On the NASDAQ, it's been a little more challenging. Peak to trough, we were down about 35%, and we're still down about 23% from where we were back in 2021. So the NASDAQ's got a ways to go. It's only gotten back about a third of what it lost during that period of time. So the equity markets have bounced back nicely, but they got a ways to go to get to the all-time highs that we had back in 2021. Bond market has stabilized a bit, but there might be some challenges with everything that's going on. We might see interest rates go back up a little bit more. But overall, it's nice to get good yields on bonds right now. So the bond market's a little bit more stable. We feel that most of the bad news has already taken place, and the challenges in the bond market have already taken place with the Fed raising rates that much. So it's nice to get these better yields on bonds. So overall, everything looks pretty good. I feel cautiously optimistic that some of these challenges that we're having right now, the negative sentiment is out there. Markets usually climb a wall of worry, and as some of these things dissipate, I think that we'll begin to see the markets climb again. So from our standpoint, we remain optimistic for 2023. All things considered, we've been weathering these storms well, but if there's questions or concerns or anything we could do for you, we're here for you. Hope you and your family are well. Look forward to seeing you soon. Have a great summer. God bless.